We welcome our viewers here in Nigeria and around the world. This is your Capital Market this Saturday. I am Bosin Amafaya and I'm in today for Temple Ashaju, your show host. And let's get the show started with some stories making the headlines in the market week we just finished. Tier 1 listed lender Zenith Bank says it received valid tenders of $392.596 million in aggregate principal amount of notes in relation to the bank's invite to holders of $500 million, 7.375% notes, which is due for maturity the year 2022. According to Zenith Bank, the tenders accepted for purchase pursuant to tender offer price in cash equal $1,098 per $1,000 in principal amount, plus the accrued interest will be payable on or about September the 16th. Zenith Bank is selling off $500 million of that note at about 7.3%, maturing year 2022 ahead of maturity date, and says the amount will be fully paid in cash. And I'm sure everyone is taking note of the insurance subsector, with everyone getting ready for the recapitalization program set up by the sector regulator, NICOM, which is hitting the roadmap. Of course, the deadline is June 2020. So we have a raft of leadership changes at the board and shareholders meetings currently going on. And this week was not an exception. Showing us a few of these. Universal Insurance appointed a new non-executive director, Jasper Osita, who was a barrister at law and had composite experience in the insurance subsector. Another insurer listed on the market, ICO Insurance, is holding its extraordinary general meeting later in October the 14th, the middle of the next month, to raise the company's capital to 18 billion naira from 10 billion naira previous by way of rights. During the week, the share price of ICO Insurance PLC went up 9.68% on the counters. Meantime, Veritas Capital earlier in the week announced that it's bringing on board a full-time CEO, Kenneth Egbaran, who is the immediate past chief executive officer at GoldLink Insurance PLC, another listed insurance company. Meantime, Lasako Assurance says it moved forward into October its annual shareholders meeting that will enable the listed insurance company to comply with the delivery period of audited financials to its shareholders. That also came during the week. And of course, if you look at the insurance sector this week, a few gains, a few losses, and you see the shares of Cornerstone Insurance are finishing the current week up 11.11%. Continental Ridge Insurance shares down nearly 8%. Mutual Benefits dipped 4.76%, and Linkage Assurance was down 3.85%. Those declines brought the insurance subsector down to 2.13% when we finished off the market week on Friday. So let's just go straight and show you the equities market wrap up for the current week. Insurance is part of that story, but it was a very solid growth for the market, 2.33% on the counters for the Nigerian Stock Exchange Composite Index. We printed 27,779 on Friday, and the market cap went up nearly $500 billion naira in the current week. At least the three final days of the week we just finished. Volume was decent, consistent with the previous week, 1.14 billion. Value for 14.08 billion in nearly 18,000 transactions. If you throw that away and you look at the sectoral performances, and you can see where the green shoots came from, banking sector led that very strong, right, in terms of volume, by the way. Oil and gas was 7.2%. But if you look at the size of the banking sector, 5.06%, that was a big one. Consumer goods came in very strongly, 3.94%. Industrial goods and insurance did not share in the weekly rally. Both sectors were down 2.13% apiece. Meantime, the unlisted securities NESD over-the-counter market was weak by 0.1%, 716.33. That's what the NESD sector index, the NSI, read on Friday. Less than 1 million Unlisted shares were traded for the week in 10 transactions. And we just finished that off on the fixed income space. Treasuries had a very interesting trading week. Yields were up 6 basis points to 13.39%. Central Bank held multiple auctions. We had 2 primary market auctions and 1 open market operations as the regulator tried to manage system liquidity. Primary market auctions, 158.64 billion naira in terms of what the central bank sold at the primary market auctions. At the open market operations market, OMO, 183.65. If you put that together, that's nearly 400 billion that the central bank sold this year. You can see the stop rates there if in the market. You already have the numbers. But if you look at the treasury bonds market, bearish, average yield up 5 basis points to 14.2%. Yields expanded this week across the curve, except on 6 naira papers. That's according to stories from Quadros Capital. So while the stock markets and the rest of the market streets were busy with the trading, the Securities and Exchange Commission took the market development program to the Ivory Towers, University of Lagos, where the 2-day conference on how to leverage the economy for the financial market, or the securities market to be precise, took place. Let's take a listen to the head of the SEC, Mary Udukwu. She told our audience about the roadmap for the market and why the academia is important in moving the market forward.
Capital markets across the world have products and mechanisms to stimulate economic growth and development. Although many of such products are available in Nigeria, there are aspects that are still untapped, thereby limiting the realization of our potential. One major initiative is to tap this potential was the development of a 10-year capital market master plan, launched by the Commission in 2014. The plan has over 100 initiatives to springboard the Nigerian capital market as one of the world's deepest and most liquid, as well as the largest in Africa by 2025. It is also aimed at ensuring that the market contributes much more to the socio-economic development of the nation, particularly in facilitating capital raising for sustainable development and transformation of key sectors. I'm glad to inform you, and as many of you that are aware, that many of our master plan initiatives are already contributing to the growth and development of the Nigerian capital market, and by extension, the economy. The successes recorded from these initiatives notwithstanding, we recognize that much more still needs to be done for the Nigerian capital market to contribute its desired quota and take its rightful place in issues and discussions of Nigeria's economic growth and development. As we move into the future, we need to continuously embrace innovation in the way we carry out our market operations and regulation. Financial innovation is germane for the conception and delivery of a dynamic industrial society. Market participants and regulators have to continually familiarize themselves with the rapid, ever-changing economic, regulatory, and business environments. Beyond the conventional capital market products of equities and bonds, as well as manual regulatory processes, the players and regulators in the Nigerian capital market are introducing new and innovative processes and products. Some of our processes that were previously manual and inefficient are being automated. For instance, with the dematerialization process completed, investors no longer need to worry about the loss or damage to their physical share certificates, as well as they are now electronically stored at the CSCS. Further, the current e-dividend system enables shareholders' dividend to be paid directly into their bank accounts without the stress of dealing with physical dividend warrants. Also, the direct cash settlements protect investors from funds mismanagement by ensuring that the proceeds of their share sales are credited directly into their own accounts, as against that of the stockbroker. We are equally working on ensuring that companies' annual reports are distributed electronically, thereby ensuring timeliness of information to shareholders and cost reduction to public companies. Through the Commodities Trading Implementation Committee, we have engaged the Standards Organization of Nigeria to publicize the relevant standards issued for agricultural products. Warehouses have also been mapped to provide information on its availability and location. We are also organizing a roundtable in October 2019 to review the entire agricultural value chain, foster greater participation within the ecosystem.
So that's talking about the BRAID framework for the investment market. But what about financial literacy and why you need financial education before you retire? And that's part of what Tony Sonny, the CEO at Emerging Africa Group, spoke about, why financial literacy is important and why illiteracy may hurt you even in your old age. Take a listen.
The consequences of these poor decisions can sometimes be catastrophic for the individuals concerned and sometimes for their entire families. Most potential retirees, for example, lack information about saving and investing for retirement. Many people fail to plan ahead and they take on financial risks without even realizing the risk that they're taking on. Problems of debt are severe for a large proportion of the population because of financial literacy or financial illiteracy. On the average, youths are less financially capable than their elders. Financial education can help families acquire the discipline to save for their own home and or for their children's education. It can help older workers ensure that they have enough savings for a comfortable retirement by providing them with the information and skills to make wise investment choices with their individual pension and savings plans. Financial education can help low-income people make the most of what they are able to save and help them avoid the high costs charged for financial transactions by non-financial institutions. Your level of financial literacy affects your quality of life significantly. It affects your ability to provide for yourself and family, your attitude to money and investment, as well as your contribution to your community. Financial literacy enables people to understand what is needed to achieve a lifestyle that is financially balanced, sustainable, ethical, and responsible. I dare say that a lot of the desperation that motivates Nigerians to unethical practices and to hoarding, first of all, to acquiring wealth illegally and unlawfully, and also to hoarding money, is based on the ignorance of proper financial planning that leads people to suddenly wake up and realize, wow, I'm getting on in years. I have worked for so long. I have nothing to show for it. Now let me begin to amass wealth anyhow I can. If you had a proper understanding, or if such an individual had a proper understanding of money and how to manage it and use it from early in their careers, many people will not be pushed to that. So financial literacy enables people to understand what is needed to achieve a lifestyle that is financially balanced, sustainable, ethical, and responsible. It helps entrepreneurs to leverage other people's money for business to generate sales and profits. Most of the capital market operators that are in this room, any of them will be able to tell you how, for example, the capital market can assist you to harness other people's capital to pursue your entrepreneurial dreams and goals. In a 2015 Nigeria Financial Literacy Baseline Survey report by the Central Bank of Nigeria, certain findings were made. I have a table here. I would have asked that it be displayed, but the table simply reflects the distribution of Nigerians across gender, age, and location, with 31.1% in urban areas as at the date of the survey and 68.9% in rural areas.
Tony Sani, the CEO at Emerging Africa Capital Group, and that's talking about why financial literacy and financial education is very important. Let's stick with the marketplace when we come back. The Nigerian Stock Exchange has a lot about why data is everything. The global spending on the financial markets data runs into hundreds of millions of dollars. So Nigerian Stock Exchange says it's important for everyone who wants to make investment decision to arm himself or herself with strategic market data. Why is this very important? And what is the stock exchange doing even beyond just statistical data? This was what hundreds of delegates listened to from Oscar Onyeama, the CEO of the Nigerian Stock Exchange this week. Let's take a listen to part of what Oscar Onyeama had to say.
Propensity for market information across a wide variety of users, especially the investors. This is partly as a result of a growing awareness of the role of market data in investment decision making. There is a growing interest in market information as it positions itself as a fundamental part of the larger value chain in disruptive technologies for managing risk and creating new strategies. This year's edition, themed Partnerships, Products, and the Customer, shines the spotlight on the need for a more inclusive collaboration among capital market players. To analyze the information in market data and to inform the debate on the challenges of extracting this information from raw data to deliver a data product that is easily consumed to make an informed investment decision. There has been a global increase in the general consumption and spending on financial market data and market data analytics, stretching beyond the market data typically provided by stock exchanges. Market commentators have estimated the value of total spending on all financial market data, analysis, and news at about $28.5 billion US, while the potential market size of financial information is valued at $50 billion US, into McKinsey estimates. Despite the evolving needs of consumers demanding for financial information globally, Nigeria still has low inclinations towards investments, according to a research by FSDH, which reported the savings ratio in Nigeria as one of the lowest amongst selected countries, including China, India, Kenya, Malaysia, South Africa, United Kingdom, and the United States. The ratio of mutual fund assets to Nigeria's GDP is also very low, at less than 1%, despite the growth of mutual funds in the country in recent times. One major reason for this low retail investment appetite is the inadequate knowledge of investment products and the benefits for retail investors. This underscores the importance of creating product offerings that promote diversity in investment, manage risk, and make the information readily available to consumers. Exchanges and data vendors are already responding to this increasing demand using new tools for market data products. At the Nigerian Stock Exchange, we believe in customer centricity, and we continue to foster partnerships with local stakeholders across the market, incorporating new technologies and expertise to drive market data byproducts, including derivatives and other structured products, such as exchange-traded funds. These structured products, which are based on the accuracy of the underlying stock prices, are being used by a broader set of professional users than those who participate on the stock exchange directly. And they use this to advise, monitor, and/or validate transactions after they've been executed. Today's market data workshop underpins the need for the analysis of data to make it available in a format that is as disaggregated as possible in order to be easily consumed for investment purposes. The exchange is in a privileged position to benefit from its broad relationships with market participants to drive the delivery of our strategy. Our focus on innovative and disruptive solutions is built around our market data. We're innovating with smart channels that can deliver on-demand data to investors, including USSD, mobile apps, SMS, and IVR. In the same vein, we are ramping up awareness and strategic response to the challenges and opportunities of the fourth industrial revolution across the market ecosystem. This is to ensure that our market remains relevant and competitive in this era of tectonic disruption. As an organization known for best practices, we're also adding new practices to our culture. We're taking on bold new initiatives to change the capital market narrative in partnership with our peers within the wider financial industry. We can say with all certainty, the future is bright.
Oscar Onyeama, the Chief Executive Officer at the Nigerian Stock Exchange. Of course, the global marketplace, let's bring in a torch of the African capital markets. On Friday, the African Development Bank Group announced that it's raised $2 billion in its second global offerings for the year, and that came in at about 1.625% yield, and that bond, which is a global benchmark, will be due in September. That's the maturity date is September the 16th, 2022. It's the second offering by the EFDB group based in Côte d'Ivoire after it did €1 billion of a 10-year paper, which was priced in March this year. According to a statement released by the EFDB, the bond, which was launched on September 11th, that's on Wednesday this week, brought EFDB's total raising for the year to $4.4 billion, and that means the DFI has executed 61% of its borrowing program for the full year 2019. According to the statement, order books for the bond was $2.8 billion, and 53 investors participated in the offering. According to the FDB, central banks and other financial institutions or official institutions were part of the offering, 64% of the $2 billion allocations. The $2 billion offering by the FDB was rated by Moody's, Standard & Poor's and Fitch Ratings. The settlement date for the $2 billion will be September the 18th. That will be next week, Wednesday. The offer was handled by Citigroup, Dayawa, HSBC, JP Morgan, and Societe Generale. EFDB Group Treasurer Asatu Diopensele says the DFI was pleased to achieve what you called the tightest ever spread to the U.S. Treasuries as far as the bond offering was concerned, and with very high quality of order book and solid participation of African central banks in the program, $2 billion program, which AFDB says is now raised, which will be maturing September the 16th here, 2020. Settlement date for those who bought will be next week, Wednesday. Back here at home, Nigeria's stock exchange says the Monday, September the 16th, trading day will be closed by the oldest member of the Nigerian Stock Exchange, 100-year-old Pa Akintola Williams. Pa Akintola Williams recently celebrated his 100 years birthday, and he will be closing the trading day on Monday, September the 16th. The octogenarian you see on your TV screen is the only surviving member of the signatories to the Memorandum and Articles of Association of the Nigerian Stock Exchange when it was formed in 1959. Pa Akintola Williams will be taking the trading floor at the Nigerian Stock Exchange on Monday. That will be interesting to see the Pakitola Williams on the trading floor. So a chartered accountant, one of the oldest on the African continent. Let's close it for today here on the program. I'll see you next time. Have a great weekend, everyone. I am Bosin Amofaye in Lagos.